Good morning, happy Tuesday. Anthony Speciale here with Speciale Analysis for another edition of Unedited and on the Edge of the Market. Hope you're having a great day so far and your week's off to a good start. So today we are going to recap on a handful of stocks that we are watching, a handful of tickers that we've discussed over the past couple weeks. We've had a few hit our targets and such, so we've essentially had videos throughout the weeks covering them. So these are just really covering the handful that are still in motion. Now, I don't think we're going to add anything new this week, and the reason I say that is the reality is the market's in the midst of what we consider a relief rally. I discussed this yesterday in our major market review or update. So until we start to resume the direction of the overall trend, that's probably the next step we're going to look for. At the moment, we've had some again, relief, some short covering, whatever you want to call it. So I'm not setting up anything new per se. And listen, that's part of the deal. Like, you have to know when it's time to get in and when it's time to be out. We prefer to stay with the overall trend, and we just know that right now we're not experiencing that continued push. Now, could that change any day now? Of course, it could always change. But that's why we look at the market on a week-to-week basis, because we're really looking for the big picture. If we can get a small piece of the big picture over and over and over again, we can be wildly successful. And that's the ultimate goal, is to just be wildly successful. So let's take a look at a few of the stocks that we do still have open. I want to discuss a little bit of management on them and in the way of how we are handling them. So first up is Boeing. We've been in this trade for quite some time. We were triggered April 25th. We had a target here at 112. We came within 1%. We moved our stop to break even. Price had really created a new pivot here. So we had moved or advanced our stop now into the profit. We came a little short of touching it this past week. So we had a high of 141.87 and our target's at 142.25. So we are fairly close. If this does in fact hit our stop, which it may very well, essentially we made about 4%, 4.35% on this trade. Is it as exciting as I had hoped it to be? No, but that's part of the deal. Like, it doesn't always work, and B, if we can take some profits, at least we can, it's something's better than nothing. And with that, listen, the game is to win more than you lose and to have bigger winners than losses. Even if we really considered this a trade that failed for us, we still failed and made money. So if this does knock us out because we have some continued strength into this upcoming week, so be it. But we're going to hopefully exit with some profit. And for that, I can live with that. Next on the hit list we've been watching for a little while is Netflix. Had this big impulse, some consolidation, more impulsing, and more consolidation. So you can see we're fluttered around a little bit here. We've advanced our stop from 225 to 207.5. We're risking not a ton of money, but again, you can see last week's price action is pushing the price back up. We're right at about break even. We'll see if it pushes higher or we'll see if it rolls back over. Again, we're in a clear and defined downtrend. It's just a matter of, when or if these things are going to, when the pushes are going to come along. Whatever that catalyst will be, whether it's inflation or interest rates or the Fed or, you name it, Ukraine, Putin, something the White House says. I mean, you could pick whatever you want. It changes day to day. It always has. It always will. Next on the hit list is XLRE. This was a short opportunity on the real estate sector spider. We had a confirmation to sell here. We had a gap down, which was positive in the sense that it was moving aggressively in our favor. But this relief rally has now come back up to test the structure in which it had failed from. So depending on, how you want to play your risk tolerance, if some people, when they settle above the structure they broke, they just exit the trade and they're done and they're out and they take a small loss, which is something you could do. Essentially, if you had entered this at the open, you could take a 4% loss and walk away. That's up to you. But we do have a stop above the previous pivot high. So impulse, correction, this is where we place our stop, and then we impulsed. So we're having some form of correction. We could then, in fact, impulse lower. Could we run up to our stop? It's very well possible. So just keep in mind, this is not a positive thing for our trade, but depending on your risk tolerance will depend on what you do with it. You're sitting at about a 4% loss. For some of you, it may just be time to exit, walk away. For others, you may say, you know what, impulse, correction, impulse, perhaps we get some form of correction and we impulse lower. You want to stay in it. Again, completely, totally up to you. Nike we're watching as well. Similar situation. Our breakout here, this was our confirmation. You could see impulse, correction, impulse, correction. And, we're in the process of some form of impulse here. We'd like to see it obviously go lower. So we did not retest the structure which we broke from. We essentially are just basically at, this area here where price is, battling it out. Thought process is up to you. I still think this trade has merit to it. I still think you have resistance here. You have resistance here. Two forms of resistance well below our stop. I think this trade still works out in my opinion. Amazon, last but not least, is retesting the structure in which we have failed from. So, impulse, correction, big impulse, correction, impulse. Basically we made a double bottom here. We have not penetrated below this. We are testing resistance here. I would probably wait to see if we had a close above the blue line, meaning we closed at it. I would wait to see if this next week closes, somewhere higher. Maybe it's time to exit this trade for, to just limit the loss itself as opposed to leaving the stop in place. But the stop is placed above the pivot, so it is, placed in an area where it's best suited for, but we're currently sitting at about a 10% loss. But this did have a large profit target on it. So if it does work out in the long term, we could definitely see a nice gain. I think this was sitting at, maybe almost a 30%, 29%, opportunity. So listen, 29% doesn't happen overnight. It takes time, weeks, maybe even a couple months. So, it's just a matter of this is not going to fall right down, but the overall trend is impulse, correction, impulse, some form of correction, and we'll see if we impulse further. So, keeping in mind, we are fighting right here the structure that represents the COVID low. So this is key. I mean, listen, this was a major event in the history of our stock market, in the history of our country, in the history of our world, in fact. And this structure right here captured that selling of COVID-19. So with that being said, this is what price is reacting to right now. There's a battle going on right now between the bulls and the bears, buyers and sellers. There's a complex, and that is what we are experiencing here on Amazon. So just putting that in perspective for you, this is a very key area. So just keep that in mind. But outside of that, those are the ones that we'll be watching for this week. I wanted to share them with you, give you a little bit of insight to see what what is teed up, where we're at, what our expectations are. Could we have set a bottom? Is it possible across the markets? I'm not a bottom picker. When the market starts to build structures to the long side, then I'll start buying again. As long as structures continue to be bought to the downside, I will be continuing to look for opportunities to sell. For me, it's just that simple. To stay on the you ideally want to stay on the right side of the market. The very simplest way to do that is placing a 200-day moving average on your chart and just saying, hey, listen, if we're above it, then we're trending long. If we're below it, we're trending short. That kind of defines the opportunities we're looking for, realizing that at some point in time, that moving average just price runs right through it. So you have to be careful there as well. Is the moving average just say all be all? It's not. But it is something that does help guide traders along the way. It is what the institutions are looking at. We do want to be on the side of what they're looking at. We want to look at their time frames. We want to look at their data. and we want to employ that into our own personal trade plans. For me, that's why I look at weekly charts. I look at monthly charts. I look at the big picture. If I can identify the big picture, I think I can find little moves in the big picture, and that has been ultimately what has offered me the success that I have found over the years and that I have shared with many of my students. So with that, guys, as always, I appreciate the time that you've taken to spend with me today. I hope you learned something. I hope you found some of this valuable. My goal is to help you become a better trader, and I do that 100% for free. All I could ask of you is simply below this video to like, share, and subscribe. This way other retail traders out there that are trying to learn and trying to develop skills for themselves have the opportunity to have exposure to me and simply take some valuable tokens from what I have to share so that they can implant them into their own personal approach and trade plan, and hopefully they become better and more successful traders. That's the ultimate goal. So with that, as always, I appreciate you being here. Thank you very much, and I look forward to seeing you tomorrow.